Implementation of Bitcoin scaling solutions in 2024, key protocol upgrades and investment for global adoption. Overview. The year 2024 marks a pivotal moment for Bitcoin as the cryptocurrency community prepares to implement several crucial scaling solutions. 5 key protocol upgrades are set to enhance Bitcoin's functionality and usability, while a significant $15 million investment has been announced to promote global adoption. The synergy of these technological advancements and financial backing aims to position Bitcoin as a more efficient and widely accepted digital currency. Key protocol upgrades. 1. Taproot. This upgrade, which enhances Bitcoin's privacy and scalability, allows for complex transactions to be bundled together. By utilizing this feature, Bitcoin transactions become more efficient and less costly as it reduces the amount of data that needs to be processed on the blockchain. Taproot's introduction is expected to bolster user confidence in Bitcoin's privacy features, making it more attractive to users concerned about anonymity. 2. Segregated Witness SegWit. SegWit separates signature data from transaction data, thereby increasing the capacity of each block. This upgrade enables faster transaction processing and significantly reduces transaction fees. By optimizing block space, SegWit alleviates network congestion, making Bitcoin transactions more efficient during periods of high demand. 3. Lightning Network expansion. As a second-layer solution, the Lightning Network allows users to conduct instantaneous transactions with lower fees. The ongoing development of this technology is critical for making Bitcoin practical for everyday transactions such as buying coffee or paying for services. The expansion of the Lightning Network aims to facilitate microtransactions and enhance the overall user experience by minimizing wait times and costs. For batching transactions, this technique enables multiple transactions to be combined into a single one, which minimizes the data that needs to be processed on the blockchain. Batching transactions not only enhances scalability but also reduces network fees for users. By allowing multiple payments to be settled in one go, Bitcoin can handle a higher volume of transactions without straining the network. 5. Smart contract capabilities. By integrating more robust smart contract functionalities into Bitcoin, developers can create a wider variety of applications beyond simple transactions. This upgrade will attract businesses and developers who seek to leverage Bitcoin for innovative use cases, including decentralized finance, DeFi applications, and automated agreements, further solidifying Bitcoin's position in the blockchain ecosystem. Investment for global adoption. A critical element of the Bitcoin scaling initiatives is the reported $15 million investment aimed at enhancing Bitcoin adoption on a global scale. This funding is directed towards improving infrastructure, user experience, and educational campaigns regarding Bitcoin's benefits. Notably, companies like WonderFi Technologies are at the forefront of this investment initiative. WonderFi recently announced that its digital asset holdings had reached $15 million, reflecting significant unrealized gains in Bitcoin and Ethereum. This substantial investment underscores the growing institutional interest in Bitcoin, driven by a favorable regulatory environment and macroeconomic conditions. Adoption trends. The trends in Bitcoin adoption indicate a steady increase among institutional and individual investors alike. The launch of American Bitcoin ETFs in early 2024 served as a catalyst for this growth. Companies such as WonderFi have reported substantial unrealized gains, with their Bitcoin holdings achieving a 48% increase and Ethereum holdings an 18% increase since the start of their buying program in Q3 2024. This reflects a broader trend of increasing digital asset adoption, supported by favorable market conditions and regulatory developments. Timeline of events. Q3 2024. WonderFi initiates its buying program for Bitcoin and Ethereum, setting a foundation for significant portfolio growth. January 2025, WonderFi announces that its digital asset treasury has reached $15 million in value, highlighting the positive impact of Bitcoin ETFs and regulatory changes on its financial performance. 2024 onwards, The implementation of key Bitcoin protocol upgrades begins focusing on scalability and efficiency, while investments into infrastructure aim to support widespread adoption. Common points and differences in reporting. Both sources emphasize the significance of protocol upgrades and financial investment in enhancing Bitcoin scalability and global adoption. Source 1 focuses on the financial performance of WonderFi and its strategic positioning within the digital asset market, while Source 2 delves deeper into the technical implications of the Bitcoin scaling solutions and their potential impact on the broader ecosystem. Source 1 highlights specific company data, whereas Source 2 offers a more expansive overview of the technological landscape. Conclusion. The developments surrounding Bitcoin in 2024 signify a crucial step toward a more scalable and widely adopted digital currency. With key protocol upgrades aimed at improving transaction efficiency and user experience coupled with a substantial financial investment to foster global adoption, Bitcoin is poised to solidify its position as a leading cryptocurrency. As the implementation of these upgrades progresses, the cryptocurrency community remains optimistic about Bitcoin's future and its potential to revolutionize the financial landscape. The implementation of Bitcoin scaling solutions in 2024 involves a range of counterintuitive insights that challenge commonly held beliefs about cryptocurrency adoption and its technical capabilities. Counterintuitive insights. 1. Increased complexity enhances usability. One might assume that simplifying Bitcoin's infrastructure could lead to increased adoption. However, the introduction of more complex protocols like Taproot and enhanced smart contract capabilities is counterintuitive. These upgrades, although more complex, can actually make Bitcoin more attractive for users and developers by increasing its functionality, thereby broadening its use cases. This complexity allows for more sophisticated applications which can drive adoption rather than hinder it. 2. Investment does not equate to immediate adoption. The $15 million investment aimed at global adoption might suggest that financial backing alone can guarantee increased usage and acceptance. However, the reality is that investment must be paired with education and infrastructure improvements to be effective. This highlights a common misconception that money alone can drive adoption without considering the necessary groundwork such as user education and market readiness. 3. Institutional interest versus individual participation. The focus on institutional investments such as those by WonderFi Technologies may lead to the assumption that Bitcoin is primarily an institutional asset. Yet the data shows that individual investors are also increasingly participating in Bitcoin markets, driven by technological advancements and regulatory clarity. This duality indicates that Bitcoin is appealing to a broader audience than previously thought, contradicting the narrative that it is solely a tool for large investors or institutions. 4. Regulatory clarity as a double-edged sword. The favorable regulatory environment in 2024 is often viewed positively for Bitcoin adoption. However, a more regulated environment could introduce complexities that may deter smaller players or those who value the decentralized ethos of cryptocurrencies. This complexity can lead to a paradox where increased regulation, while intended to enhance legitimacy, might simultaneously alienate grassroots participants who prefer a less regulated space. 5. Volatility as an adoption driver. Conventional wisdom suggests that high volatility in Bitcoin prices hampers its use as a currency. However, the narrative emerging from 2024 indicates that volatility may actually stimulate interest and trading activity. The significant unrealized gains reported by companies like WonderFi demonstrate that a volatile market can attract more investors looking for high returns, which can lead to greater engagement with Bitcoin overall, contrary to the belief that stability is necessary for adoption. Conclusion. The Bitcoin scaling solutions and associated investments in 2024 reveal a complex landscape where counterintuitive dynamics are at play. The interplay between technological complexity, investment, regulatory environments, and market dynamics challenges traditional notions about cryptocurrency adoption. As these elements interact, they will shape the future of Bitcoin in ways that may not align with prevailing expectations. In the context of Bitcoin scaling solutions and the upcoming developments in 2024, several important aspects of the report may not receive the attention they deserve. Here are key points that could be overlooked, along with their significance. 1. Importance of protocol upgrades beyond scalability. While the report highlights specific protocol upgrades like Taproot, SegWit, and the Lightning Network expansion, the broader implications of these upgrades often go unnoticed. For instance, Taproot not only improves privacy and scalability but also enhances the potential for complex smart contracts on Bitcoin. This shift could position Bitcoin as a more versatile platform, potentially attracting developers who might otherwise gravitate toward Ethereum or other blockchain ecosystems that are perceived as more flexible for decentralized applications. Significance: the evolution of Bitcoin into a platform that can support sophisticated smart contracts could redefine its use case and appeal, attracting new users and developers, thus enhancing its value proposition as a digital asset. 2. Investment in infrastructure and education. The $15 million investment aimed at global adoption is more than just a financial figure. It represents a strategic shift toward building a sustainable ecosystem for Bitcoin. The emphasis on infrastructure improvement and user education is crucial. Many potential users are still unfamiliar with cryptocurrency, and enhancing their understanding is essential for broader adoption. Significance: investments in educational initiatives can demystify Bitcoin for average users, reducing barriers to entry and fostering a more informed user base. This could lead to increased transaction volumes and a more robust Bitcoin economy. 3. Institutional adoption dynamics. The report mentions the growth of institutional interest in Bitcoin, particularly with the launch of American Bitcoin ETFs. However, the underlying trends driving this institutional adoption merit closer examination. Factors such as regulatory clarity, macroeconomic conditions, and the shift in investment strategies among institutions are critical but often overlooked. Significance: understanding these dynamics can provide insights into the stability and future growth of Bitcoin as an asset class. As institutional investors play a larger role in Bitcoin's market, their strategies and motivations could significantly influence price stability and market behavior. 4. Batching transactions and its ripple effects. The concept of batching transactions is presented as a technical upgrade that enhances scalability. However, the broader implications of this practice are often underestimated. Batching not only reduces fees but also leads to a decrease in blockchain congestion, which can improve the overall user experience. Significance: enhanced user experience through lower fees and faster transactions can lead to higher transaction volumes, fostering a more vibrant ecosystem. As users experience the benefits of these upgrades, they may be more likely to adopt Bitcoin for everyday transactions. 5. Comparative analysis with other cryptocurrencies. The report briefly touches on the competitive landscape by mentioning Ethereum's growth alongside Bitcoin's upgrades. However, a deeper analysis of how Bitcoin's scaling solutions compare with those of other cryptocurrencies could reveal critical insights. For instance, while Ethereum is known for its robust smart contract capabilities, Bitcoin's emerging capabilities might appeal to a different segment of users seeking security alongside functionality. Significance: understanding where Bitcoin stands in relation to its competitors can inform investment strategies and user adoption trends. If Bitcoin can successfully market its advantages, it could carve out a unique niche in the cryptocurrency space. 6. Regulatory context and its implications. The report hints at favorable regulatory conditions being a driver for institutional adoption but does not delve into the specifics of these regulations. The regulatory environment is pivotal for the legitimacy and long-term viability of Bitcoin. Changes in regulations can influence market dynamics, investor confidence, and ultimately Bitcoin's price. Significance: a clear understanding of the regulatory landscape can help stakeholders navigate potential risks and opportunities. As regulations evolve, they may create new avenues for institutional investment and mainstream adoption. 7. Cultural and behavioral shifts in adoption. The report discusses adoption trends but does not explore the cultural and behavioral shifts that accompany increased Bitcoin usage. As more individuals and institutions adopt Bitcoin, societal perceptions of digital assets are likely to change. The normalization of Bitcoin as a legitimate form of currency could shift consumer behavior significantly. Significance: recognizing these cultural shifts can help inform marketing strategies and community engagement efforts, which are essential for driving further adoption and acceptance of Bitcoin. 8. Long-term vision and ecosystem development. The report outlines immediate investments and upgrades but lacks a discussion on the long-term vision for Bitcoin's ecosystem. The transition to a more scalable and user-friendly Bitcoin could pave the way for innovations that extend beyond financial transactions, such as decentralized finance DeFi applications on the Bitcoin network. Significance: a long-term vision that incorporates diverse applications of Bitcoin could encourage broader participation and investment in the ecosystem, leading to sustained growth and innovation. Conclusion: the implementation of Bitcoin scaling solutions in 2024 is a multifaceted endeavor that extends far beyond technical upgrades and investment figures. By recognizing the significance of these often overlooked aspects, such as the implications of protocol improvements, the importance of education and infrastructure, and the evolving regulatory landscape, stakeholders can better appreciate the potential trajectory of Bitcoin in the coming years. Understanding these dynamics will be critical for investors, developers, and users alike as they navigate the evolving cryptocurrency landscape. 1. Key protocol upgrades. The 5 major upgrades: Taproot, Segregated Witness, SegWit, Lightning Network expansion, batching transactions, and smart contract capabilities, represent essential technical advancements that aim to enhance the scalability, efficiency, and usability of Bitcoin. Each upgrade plays a pivotal role in addressing existing limitations such as transaction speed and cost, while also expanding Bitcoin's functionality beyond simple transactions. In-depth analysis of these upgrades can help in understanding their potential impact on transaction dynamics and user adoption in a growing digital economy. 2. $15 million investment for global adoption. The strategic investment aimed at fostering Bitcoin's global adoption highlights the increasing institutional interest and the potential for significant market growth. This investment is not merely about capital infusion. It focuses on improving infrastructure, user experience, and educational initiatives regarding Bitcoin. Analyzing the implications of this investment can reveal insights about the evolving market landscape, the role of institutional players, and the necessary conditions for mainstream cryptocurrency adoption. 3. Adoption trends. The trends showing a steady increase in Bitcoin adoption among both institutional and individual investors are crucial to understanding the broader market dynamics. Factors such as the launch of American Bitcoin ETFs and the favorable regulatory environment are key drivers of this growth. In-depth discussion of adoption trends can provide a clearer picture of market sentiment, investor behavior, and the future trajectory of Bitcoin as a dominant digital asset. 4. Timeline of events and market response. The outlined timeline of events leading up to and following the implementation of Bitcoin scaling solutions provides context for the anticipated changes in the market, with critical milestones such as the buying program initiation by WonderFi and the expected enhancements in Bitcoin's protocol. Examining how these events influence market performance and investor confidence can lead to a better understanding of Bitcoin's evolution in the financial ecosystem. This analysis can also shed light on the timing and nature of regulatory impacts on market dynamics. 1. The introduction of the Internet. 1990s. The advent of the Internet in the 1990s marked a transformative period in technology and communication. The implementation of various protocols such as TCP/IP allowed for the scaling and expansion of network connectivity, facilitating the global adoption of the Internet. This era saw significant investments in infrastructure which enabled businesses and individuals to connect and share information in unprecedented ways. Much like the current focus on Bitcoin scaling solutions aims to enhance its usability and adoption. 2. The upgrade of the telephone system mid-20th century. The transition from analog to digital telephone systems during the mid-20th century exemplifies a major technical upgrade that improved communication efficiency. Innovations like digital switching and fiber optics increased capacity and lowered costs. This transformation parallels the scaling upgrades planned for Bitcoin, which aim to enhance transaction speed and reduce fees, thereby increasing accessibility for users. 3. The evolution of the personal computer 1970s to 1980s. The development of personal computers in the 1970s and 1980s, driven by advancements in microprocessor technology and software, led to a significant increase in computing power and accessibility. Companies like IBM and Apple made substantial investments in R&D to create user-friendly systems that appealed to a broader audience. Similarly, the planned Bitcoin protocol upgrades and investment initiatives reflect a commitment to making Bitcoin more accessible and appealing to a global market, thereby fostering widespread adoption. The future outlook for Bitcoin in 2024 is promising, driven by key protocol upgrades and significant investments aimed at enhancing scalability and adoption. Here are the predictions for the future of Bitcoin and its ecosystem based on the developments anticipated for 2024. 1. Enhanced scalability and efficiency. The implementation of critical protocol upgrades, including Taproot, SegWit, and the Lightning Network, is expected to significantly improve Bitcoin's scalability and efficiency. As these upgrades are rolled out, transaction times are likely to decrease and fees are expected to drop, making Bitcoin more attractive for everyday use. The integration of batching transactions and improved smart contract capabilities will also allow developers to create more complex applications on the Bitcoin network, further expanding its utility beyond a store of value. 2. Institutional adoption surge. With the launch of Bitcoin ETFs in early 2024, institutional adoption is projected to skyrocket. Companies like WonderFi Technologies, which have already reported substantial unrealized gains in their digital asset holdings, are likely to continue capitalizing on this trend. As regulatory clarity improves, more institutional investors are expected to enter the market, bringing significant capital inflows and legitimizing Bitcoin as a mainstream investment asset. This trend will likely lead to a broader acceptance of Bitcoin in traditional financial portfolios. 3. Increased global investment and infrastructure development. The reported $15 million investment aimed at enhancing Bitcoin's infrastructure will likely catalyze global adoption. This investment will focus on improving user experience, education, and access to Bitcoin, particularly in underbanked regions. As infrastructure develops, including more robust exchanges and wallet services, Bitcoin's accessibility will be enhanced, facilitating a wider user base. This could lead to a surge in transactions and increase Bitcoin's market presence. 4. Expansion of Bitcoin use cases. As Bitcoin's scalability improves, we can expect to see a diversification of its use cases. Beyond being a digital currency, Bitcoin may increasingly be used for remittances, micropayments, and smart contracts. The development of decentralized applications (dApps) on the Bitcoin network could also gain traction, attracting more developers and businesses to explore innovative solutions utilizing Bitcoin's technology. This expansion could further solidify Bitcoin's position in the crypto ecosystem as a versatile digital asset. 5. Regulatory environment and market stability. The evolving regulatory landscape is expected to play a crucial role in Bitcoin's future. With a more favorable regulatory climate anticipated in 2024, particularly in the U.S., institutional investors may feel more secure investing in Bitcoin and related assets. This regulatory clarity will likely lead to increased market stability, making Bitcoin a more attractive asset for both retail and institutional investors. As regulatory frameworks become more defined, they will help mitigate risks associated with volatility and fraud, encouraging broader adoption. 6. Interoperability with other blockchains. As Bitcoin continues to evolve, interoperability with other blockchains may become increasingly important. Innovations that allow Bitcoin to interact seamlessly with other cryptocurrencies and blockchain ecosystems could enhance its functionality. This could lead to collaborative projects that leverage the strengths of multiple blockchains, thereby increasing Bitcoin's relevance and utility in a multi-chain world. Conclusion. In summary, the future outlook for Bitcoin in 2024 is characterized by a convergence of technological advancements and increased adoption driven by institutional interest. The anticipated protocol upgrades will enhance scalability and efficiency, while significant investments will bolster global infrastructure and user engagement. As regulatory clarity improves, Bitcoin is likely to solidify its status as a leading digital asset, paving the way for a more robust and widely adopted cryptocurrency ecosystem. The next few years could redefine Bitcoin's place in the financial landscape, transforming it into a more versatile and widely accepted medium of exchange.